Hey everybody, I hope everyone is doing well and had a good day. In this video, we're going to review the E-mini S&P 500 5-minute chart for Friday, May 15th, 2026. Here's the daily chart. Just want to turn on here's the Globex chart because the average daily range going into the day is about 80 points. And it's a strong bull trend as we go into the day. And it's possible you can count 1, 2, 3, 4 pushes up in this tight channel. So maybe a correction is coming, but for the most part, it's always in long better to look to trade in the direction of the trend when you're looking at the daily chart here. However, I do want to talk about the Globex chart as we go into the day and the big gap down that we had going into the day. So here's the 5-minute. Actually, we'll talk about the 15-minute chart. And here's what we had going into the day. This is the 15-minute chart, the Globex session. So overnight, here's the price action. We have this big bear channel. And overall, it's a fairly tight channel. We do have pullbacks lasting several bars here and here. But if you look at a higher time frame chart, you know that these pullbacks are going to be less prominent or less obvious, and this is a tight bear channel and a bear breakout on a higher time frame. So what's most likely going to happen here? Well, it's a spike and channel bear trend, and in general, the expectation is that the channel evolves into a trading range. So going into the day, that is the overall expectation, but I also want to talk about the expectations on the day's range as we go into the day, because look at the size of the gap down. It's a really big gap. I said the average daily range on the Globex session is about 80 points. And the gap size going into the day, 67.25 points. So 67 points down. That's almost a day's range down into the day. So you have to wonder, is it more likely that we're going to get a giant day that's 2 or 3 times the size of an average daily range? Or is today going to go more sideways or up? And usually what it does is it goes more sideways or up when there's such a big gap like this. But also based on the higher time frame context, we've talked about the tight bull channel on the daily chart. Really not expecting the market to reverse straight into a strong bear trend. But we do have to respect the gap down as the breakout that it is, and know that there are trapped traders somewhere above as we go into the day. So a big gap down going into the day, expecting a second leg down, also expecting the day to be mostly sideways, and for the day's range probably not to grow too much to the downside. Follow through selling on bar 1, but tail below 1. Not as strong as it could be, especially when the bars are so far below the moving average. Bears really want to see above average bearishness if they're going to sell. But the tail on 1 indicates that traders are buying into the close of bar 1. Bar 2, a much smaller bar than bar 1, and also a lot of overlap. Not ideal for the bears because the risk is big and they're selling far below the moving average. 3, bear bar. Again, a lot of overlap. You can count 3 pushes down on the smaller time frame. Down on 1, up on 1, down on 2, up on 3, and down on 3. So that's 3 pushes down. On the lower time frame, it's more clear. And because of that, the expectation is a minor reversal. There might be more traders buying below 3. But because of the micro channel on the open, I said what's expected is a minor reversal, not a big reversal and bull trend to the upside. So we have a strong reversal bar for For the bulls, good for the bulls. Bull bar closing on its high, far below the moving average after 3 pushes down. Bears will probably exit, always in bears, probably exit above bar 4. If you're a bull, you can probably buy for a scalp, 4 strong enough that there may be traders trapped selling below 3, but it's still more likely going to lead to a minor reversal. And then 5, a follow-through bar for the bulls. Good for the bulls, but it is, if you look at the tail on bar 5, market rallied on 4, pulled back on 5, and rallied on 5. So it's a bear micro channel, a 2-legged pullback on a smaller time frame, and we're entering the sell zone of the micro channel, 50% pullback, probably traders selling in this area. And then again, the structure on the smaller time frame, it's already 2 legs up for the bulls. So the bulls buying, scaling in, are scalping out on 5. That leads to a bear bar on 6, but now we have a decent reversal and follow through 4 and 5. That may get a second leg up. So there's probably traders buying below 6, buying below 5. The low 1 is probably going to lead to more traders buying below. It's far below the moving average. And we have maybe 4 or 5 bars going sideways. The stop order sell below 6 triggered, and it's a disappointing entry bar for the bears. If you're selling this far below the moving average, your premise has to be that you're selling momentum, because you're selling far below the moving average. You're not selling value, you're selling momentum. But look at the momentum for the past 5 bars or 6 bars. The market's going sideways. And that increases the probability that more traders are going to be buying below 6, buying below 7, expecting reversion to the mean being the moving average. And I talk about this in most videos, that bar 1 usually does not remain the high or the low of the day. So that's also a magnet that the market will probably want to test. More sideways with an inside bar on bar 8. Market's in breakout mode, and then a breakout bar on bar 9. So that's good for the bulls. Second leg up, likely. I said the magnet above bar 1 high is probably going to be tested. Now the market's in breakout mode, small bars, overlapping bars, and then a breakout bar with an open gap. The close of bar 9 far above the highs of the prior bars. The bears may argue it's a gap down and follow through, bear breakout, 2-legged pullback. They're looking to sell a low 2, but the bulls have the argument that this is occurring far below the moving average. Breakout mode, bull breakout 9, second leg up, likely, with the magnet above bar 1. So both sides have an argument to trade here. The bears, using a wide stop, can sell and scale in higher, and the bulls can buy expecting a scalp, testing at least the high of bar 1. And the market gets there on bar 10. Now we have a micro channel. It's good for the bulls. Second leg up, likely. First reversal probably will be minor, but this looks like a trading range. And we've had 2 legs up to resistance. Small reversal bar 11. Good risk reward, and that means low probability sell for the bears. The context is okay for selling because it's 2 legs up to resistance in a bearish environment, with the gap down, all the bars below the moving average, approaching resistance, bar 1 high, and the moving average. But because of the momentum, 7 through 11, the micro channel is probably going to get a second leg, which means the first reversal attempt will likely be minor. So as far as selling below bar 11, like I said, it's low probability, but good risk reward. 12, breakout bar. So now the bears have reversal and follow through. That's good for the bears. The traders buying bar 10, disappointed with 11 and 12, and that creates resistance above as well. Plus, if the bulls get another leg up, it'll be leg 3. 1, pullback, 2, pullback, 3. And 13 is that bull breakout that begins leg 3. So now the bulls have 3 legs up to resistance in a trading range in a bearish environment. So the upside here is probably limited. The bears, I said the micro channel here will probably get a second leg, and this may be the second leg, the minimum second leg that the bulls get, and the bears may be looking for a second entry short. Can you sell below 14? It's another low probability sell. You can take the trade, but the signal bar is not great. It's higher probability if you wait for the breakout. then you got the breakout 16. There's a decent second entry short. Now it's a low 2 at the top of a trading range with a decent bear breakout bar. Test targets in a trading range. Breakout gaps usually close, and there's an open gap, the high of these breakout points, high of 7 and 8. So the market may want to test down here, probably support. Strong breakout will probably get a second leg, and traders are probably buying somewhere below. But the second entry short, the bulls will probably exit below 16, and bears can sell below 16 for a scalp. Reversal bar 17, but forcing you to buy a high 2 close to resistance in a trading range. So really not ideal for buying. There might be more traders selling above 17. And traders come in above 17, and that leads to another leg down. Now there's 3 legs down to that support, the breakout point, and then a decent reversal bar 20. Bar 20, it may lead to a correction. It's a dueling lines pattern, so 3 legs down to support, and then a decent signal bar. Bar 20 probably will get a second leg up, but the upside still might be limited. It looks like we're in a trading range, and this is resistance above. So the market pulls back on 21, and then the low of 21 to the high of 23 is a second leg up for the bulls. First signal, bar 20. That's the reversal bar, momentum, then a pullback, and then it's actually a micro channel. And on the smaller time frame, it's a breakout, pullback, and a second leg testing resistance, the moving average, the breakout point, bar 15 low. And the market goes sideways. It actually gets a pullback and a second leg as well. So micro channel, pullback, second leg, but looks like the bulls are having a hard time as the market approaches resistance. The market's clearly going sideways here in a trading range. It's in breakout mode. And then a breakout follow through 26, 27. The bear channel, it has grown to more bars, 27, testing that channel line and support once again. So 27 really needs follow through for the bears. Even if it gets follow through, there's probably traders buying below. You have the stop order that triggered below bar 6, and that will probably be support as well. And the bears get some follow through selling, but it's at least leg 3 and approaching support in a trading range. So the downside here might be limited, even though it's a micro channel and the first reversal is probably going to be minor. You have to be careful if you're selling leg 3 near support in a trading range. And then 30, a decent bull outside bar closing on its high. That's good for the bulls because it's 3 legs down to support in a trading range. 30 will probably get a second leg up. It's pulling back 31, but 31, it's a low 1 short occurring in leg 4, maybe even leg 5 near support. There's probably traders buying below 31. And the buyers come in below and the bulls get their second leg up. And this is a fairly tight channel, 30 through 35. It's a breakout on a higher time frame chart, and it's probably going to get a second leg up of its own, but we have to watch for the resistance area, like back up here. Every time the market tests this horizontal line, we find sellers. Tries to get there, sellers again. Probably resistance here, but decent momentum for the bulls, so a second leg up is likely. The first reversal down is probably going to be minor. 40, that's a low probability sell. Good risk reward, low probability. It leads to a big bar, 41, which is good for the bears, but this tight channel for the bulls, like I said, it's a breakout on a higher time frame. It's about a 50% pullback of the rally. It's also testing the breakout point of the bar 34 high. So there's reasons to expect buyers in this area. And the bears really need a follow-through bar. Otherwise, bulls might take it as an opportunity to buy a pullback, expecting this rally to get a second leg up because we just had 3 legs down, and that's probably going to correct for a couple of legs sideways to up. 42, bears fail to get follow-through. Now it's a bull breakout pullback. Bulls looking to get a second leg up. and then a 3-bar micro channel. Technically a double top, 40 and 44, but let's see if the bears can get a decent sell signal. Otherwise, the micro channel here is probably strong enough for a second leg, and the first reversal will probably be minor. So you can see the stop order that triggered was below bar 45, not a good sell signal. 4 or 5 bar bull micro channel, and then further breakout to the upside. But the current high of the day is probably resistance. It's a trading range day, so expect breakouts of the trading range to fail. And then a breakout attempt 48, but testing that resistance. Also, look at the structure through here. It's a breakout from bar 4, the low of bar 4 to the high of bar 11 is a bull breakout. Then there's a wedge bull flag, and then a second leg up. And the second leg from 30 to 48 has 2 legs of its own. 30 to bar 30 to bar 40, leg 1, pullback, and then bar 41 to bar 48, leg 2. And then even the second leg of the second leg, so that's 1 pullback, 2, 1 pullback, 2. This has 2 legs of its own as well. The micro channel, 41 through 45, leg 1, then a pullback, and then a second leg to resistance. So we may start to go more sideways here and find bulls looking to take profits and bears starting to look to sell. But the momentum here is still strong enough that I expect the first reversal to fail. Better if you can wait for a second entry short to go short. But going sideways at that resistance was expected. Not a great sell here, but probably sellers above 51, as that would be 1, 2, 3 legs up and still testing resistance on a trading range day. Micro channel for the bears increases the probability of sellers above. The bulls get another leg up, but as we break out to a new high, it's really a weak bar, 55. It's not a big bull bar closing on its high far above the high. And we'll see, can the bulls get a follow-through bar? And instead it's a reversal bar. So 56, it's actually a reasonable bar to sell for a swing trade. Good risk reward. In general, you're going to get low probability, but the structure is good for selling, which means it's good. It's reasonable for stop order, or let me back up. It's reasonable for always in bulls to exit below 56 because the day's structure looks like a trading range day. And you have a structure with 3 legs up to the high of the day. And now you have a bear bar closing on its low. So it's reasonable that at a minimum, this is probably going to pull back and correct for a couple of legs. That's best case scenario for the bulls. But the problem is that since it's a trading range day, this can pull back a lot deeper than the bulls want. If this is a channel, if it's a spike and channel swing for the bulls, market can pull back all the way down to here, or even back down to the start of the channel below bar 31. But low probability sell below 56. Higher probability if you wait for a bear breakout signal. 57 trading range bar, probably sellers above. And then 58, there's the breakout bar for the bears. So now you have worse risk reward because if you sell 58, your stop is above at least 58, maybe above 56. So your stop is further, but now you have a higher probability of making a profit. Now you have the bear momentum, the trapped traders. The structure is good, 3 legs up to the top of a trading range, and then a good bear breakout. So 58, okay to sell and scale in because the first pullback will probably, the first attempt to reverse the bear breakout will probably be minor and be a pullback and then lead to a second leg down. 59, testing that resistance once again. And then the bears get their second leg down. But this is a very tight channel. It's a micro channel. There's no pullbacks from 56 to 61. And so all of this is a simple price leg. There's no pullbacks on this time frame, which makes it a breakout, which means the first pullback will probably lead to sellers above and a second leg down. But because of the structure, bear breakout, implied pullback, second push down, it may start to pull back here But again, that pullback is probably only going to be minor. So we're starting to get that pullback 62, strong enough bar 62. The traders who sold the close 61 are disappointed with 62, but is 62 going to reverse the entire micro channel? Probably not. So still probably sellers above, but 62 strong enough that there may be buyers below and a second leg sideways to up. And that's what the bulls get here. So the bull, it's a trend bar, it's an inside bar, so a non-breakout bar, but on a smaller time frame, you have trapped traders selling the close 61, trapped 62, and that leads to a bounce 63, and then the second leg here. But now it's basically a low 2 short, bear, breakout, pullback, low 1 triggers, now a second leg up to resistance, breakout point here, moving average here. So a low 2 short, 66, bear, breakout, probably a minor reversal because these bars heavily overlapping one another. Looks like a pullback, not a major reversal. And again, this is a micro channel, 56 through 61, so I'm still expecting a second leg down. Also, the bigger picture supports another leg down, talking about the gap down and follow through selling going into the day. This is basically a big low 2 short for the bears. If you look at, I don't know, a 30-minute chart maybe, there'd be a low 1 short, one leg up. For the bulls, a pullback, a second leg up, and this would be a big low 2 short. And then this is confirmation, the bear breakout. The low 2 triggered, it's a bear breakout or a bear breakout bar on a higher time frame, getting a minor reversal. And just think about it here. Market's in breakout mode, overlapping bars, a trading range bar 66, but testing, look to the left, a breakout point where bar 61 broke out. The traders is back up here. If you bought for any reason, let's say you bought below bar 59, you're disappointed, you're trapped with bar 60, and especially 61. So if you bought here, what are you going to do when the market comes back to your original entry price? If you bought here, scaled in lower, you're able to make a profit on your lower entry and break even on your first entry, and that creates resistance. And if the trader's buying, in other words, if bulls are selling here and bears are always selling, then that creates resistance. And that's the dynamic, the fuel that creates second legs, breakout, trap traders, pull back to resistance, and then second leg down. So bear breakout 67, reasonable bar to sell, expecting a second leg down. That's your low 2 short breakout bar. And the bears get that second leg. Micro channel, bar to bar 70, first reversal probably going to be minor. You can see the stop order triggered, 71 immediately failed. And this is all minor reversals, small bars, really no bull bars closing near their highs. So this micro channel will probably get another leg down of its own and say spike and channel bear swing. What about bar 74? It's a good looking bull bar, but it's really, if you look at bar 72, 73, 74, expanding triangle, bear flag, it's occurring in a bearish environment, tight bear channel, getting higher highs and lower lows. And maybe it's a final flag in this swing, but as far as buying 74, I said it's an expanding triangle, which means if you're buying 74, you're buying at resistance, the bull channel line. And you're also buying at resistance here, breakout point, bar 62 low, traders buying below there, getting trapped. And then I said micro channel, second leg down likely. Has this micro channel had a second leg down yet? To me, it has not. It's had a pullback and an attempt, a low 1, and then a second pullback, maybe a low 2 here. And then 75, that could be trend resumption. Leg 1, pullback. Leg 2, pullback. Leg 3. What about buying 76, wedge bottom? Some traders might buy it. You can argue there's support to the left. It's 3 legs down, but look at the buying pressure through here. So if you're going to buy bar 76, it's a low probability trade. It's similar to selling 56 over here. If you're selling 56, you know it's a low probability trade. There's open gaps, selling pressure is weak, but if you wait for that breakout, then you have a higher probability sell. So similar here, if you buy 76, it's a low probability trade offering good risk reward, but it's higher probability if you wait for the breakout and the bulls never get it. The stop order actually never triggered. And then sell climax 77. So it's a sell vacuum testing support once again. Maybe it's leg 1, leg 2, leg 3. Reasonable bar to take profits on, but as far as buying to go long, I would not. I think it's aggressive to simply buy the bar because it's possibly testing support. I think it's better if you wait for a reasonable stop order entry. And then is 78 a good stop order entry? Is 78 going to reverse this tight bear channel? Probably not. Again, it's like selling 56 or buying any of these bars, 73, 74, 76. It's a low probability trade offering good risk reward, but it's a low probability. And once again, it did not trigger another bear breakout 79, another bar that's reasonable to take profits on as the market's getting a sell climax late in the day to a new low of the day. It's also very interesting. This was a day, one of those days where the high and the low of the day is created in the second half of the day. The high being 56 and the low obviously being currently bar 79. Usually the market creates either the high or the low of the day by bar 18. That happens maybe 80% of the time. So this is interesting. It's just one of those days. Structurally, it doesn't look like an expanding triangle, but there are higher highs and lower lows. And again, it's just one of those days that the high comes later in the day and the low comes later in the day. Just about out of time here. This is maybe the last bar of the day. It's a bull reversal bar, but after a strong bear breakout where bulls really are not making money, they're having a very difficult time making money through here, and especially through here. It's probably a minor reversal. It's a good looking bar, but it's relatively small compared to the big breakout bars, and it's another trade that offers good risk reward, but it's a low probability trade if you're buying. Okay, that's going to be it for today's end of day review. For more information on price action fundamentals and how to trade price action, please visit the Brooks Trading course link in the description of this video. Thanks everybody for watching today's review, and I hope everybody has a good weekend.